Gentlemen of the universe, of the VIX, of the social VIX, of the gold rush, of the Tesla panic, of the tariff world, of the
Smooth Holly 2.0.
the Putin fans, the grifters of the world unite. We are all here representing Trends with Friends. What a special group today. It is March. Feels like December 2025. 2 months has already felt like 12 months. To discuss everything going on. A lot of new trends, a lot of broken trends, a lot of broken hearts, a lot of people that chase stocks that are unhappy, a lot of people that are buying dips that are going to be surprised. Phil Pearlman, welcome, wearing the
Morning.
drab green. What made you choose that color?
I'm
this
just low
morning?
key, man. I'm low key.
It's
You know what
military
I mean?
gear. It's military
Oh,
camouflage, but
yeah.
it's
Zelensky.
Zelensky. It's
What?
Zelensky outfit.
You don't own a suit? Myron, you don't own a suit? You're in the highest office of trends right here.
I'm just low key.
When was the last time you said thanks to Michael?
I'm so grateful for Michael. He
All
teaches
right.
me. He teaches me. I learn much from this man.
Okay, fine. And joining us today, special guest, a man who is extremely zen, a man who I was introduced to from a childhood friend, Lowell Kamen. Lewis has seen many cycles, has been a guest frequently. I don't know if this is the first time with Michael. Michael, is this the first time with you?
I
Okay, so
believe
you guys
so.
are going to be
Pleasure.
best pals. Lewis was he's worked for everybody that was important in the industry, but now works for himself, running about 4 or 5 billion out of Naples, Florida. A man that I visit to go talk life and fishing a couple times a year. Can we pull up a picture, please, of my recent catch? The old tarpoon. The old one cast tarpon. Keith is already sleeping at the wheel. Doesn't want to. This is Keith and I. I flew out for a
Wow.
day, Mike. I was out, I don't know, in October. The storms were coming. The wreck of the Edmund Fitzgerald. I was on full loop on my. What a great song. The wreck of the Phil. You must love that song, The Wreck of the Edmund Fitzgerald.
Yeah, it's a little
That's a
downer.
fish.
It's a little bit of a downer.
Anyway, it is. But the storms were coming to Naples. Lewis said, "Get your ass here. We got a little open weather." I hadn't caught a tarp. I think we were like 0 for 4 or 5 over the last 5 years. Catch a lot of fish, but no tarpon. We like to go after the big game. We go out. Storm's coming. Our guide, what's his name again? Our guide. I'm having a senior
Aaron
moment.
Blaisdell.
Aaron
Fine guy.
Aaron Bill Blazejowski from Night Shift pulls up, sees a couple of noses in the water, says, cast over there. Phil, first cast, explosion. I don't know what does that look like? 20, 30, 40 pounds, Lewis?
It's a great
Maybe 30
pick,
pounds.
and it's a great fish. Beautiful.
What do you think that is,
Howard
Lewis?
connected. He's a machine. What can you say? It's a renaissance. man.
Anyways, it's not about hooking one. It's about landing one. All I cared about, it had been so long since I landed one of these prehistoric monsters. So it really isn't about hooking it. It's hard to enjoy it because it's so rare, but we definitely enjoyed it. Light tackle. It was a kind of a miracle, don't you think, Lewis? Because then the storm came in like 10 minutes later. We had to cancel the day.
Yeah, we fished for like 15 minutes. But you're right. Like tarpon is like 100 million years old. Like when dinosaurs were like roaming the earth, like the tarpon was still a tarpon.
Yeah. And so this fish was completely humiliated when it saw my face. It goes, I didn't know Larry David fished. And but anyways, catch and release. And instead we shot a person back at the, my rule is if you catch and release a fish, you get to shoot someone in the leg back at the marina. So it was a fantastic day. And anyway, so Lewis is here. Lewis has been with us, me on Panic with Friends, Trends with Friends, talking about de-globalization since 2022. Way ahead of this trend. It means so we're going to dig into that. And then Michael, who is back from India, who just spent a week talking tech and global economy in India with Team Stocktwits and some royalty and some leadership over there in India. So we're going to take it away. Phil, I wanted to start with I don't know if they pull up Stocktwits some of the new features, or we can go right into the social VIX, or we can go right into the indexes. Phil, take it away. What do you think we should start with?
Social VIX. It just sounds so cool. This is not on Stocktwits yet. This is in testing. And it's
Yeah,
the
this is
social
something
VIX.
for about 15 years as a VIX fan and as a Fear and Greed fan. We have so much data around the indexes and around people chatting about the indexes, and now we have it over such a long period of time that we're rolling it out slowly. But you're looking at this is the only data that that exists that adds a social flavor to the VIX, and it's something that Stocktwits, finally feels comfortable rolling out after years, and we're still, going back and checking. But I want everybody to comment on this, and I'll give everybody some context so they understand what this is. The VIX, maybe Phil can give a history lesson, but the VIX is something that when it spikes, that's just a sign that fear is rising. And there was a historic spike in March 2020 when the markets closed, COVID, the country shut down, VIX hit 90. Our social VIX hit an all-time highs. Again, we hadn't launched this publicly, but our social VIX hit an all-time high. And I think what's super interesting, what our VIX, which I have felt over the last few years, is broken because we've seen spikes to 60 when the social VIX wasn't really doing anything. We've seen these weird anomalies in the VIX, but what the VIX doesn't measure is the chatter on a place like Stocktwits. Anyways, flash forward to this year, the election, and then this year, and we're seeing the social VIX, and that's just a measurement of chatter on top of the VIX, on top of readings of fear and greed. But our own little flavor of it has been spiking to higher levels than so retail is freaking out for whatever reason, more so than they did in. Now we can now comment on all that. So Phil, when you see this in the March 20 spike and now the spike here that's even higher in the market that we are living in right now, is there something that stands out here that maybe explains it, or is there anything interesting that you see?
Well, this is going back, it looks like 6 years.
Yeah.
And we're getting an all-time high here. And so this is sort of retrofitted data-wise, which is fine. We're just reading the data over a long period of time prior
Correct.
to when we began calculating this. And there is, if you go on the streams, you will see a lot of nervousness, anxiety, acrimony out there, just to what you're saying. So I think it is accurate, and I think there's a lot of nervousness out there, and it's a really interesting metric. And I'm not going to give a whole history lesson, but the VIX is really a derivative.
Yes.
In a way. It's implied volatility, and it's not really measuring fear. It's measuring implied volatility. So it's like if you're getting, if a doctor takes your blood and they measure cholesterol, they're not directly measuring how clogged your arteries might be. They're measuring cholesterol. So it's like a derivative. Same thing there. But here we're actually measuring, and I know that Shiv, doesn't necessarily want us to be showing this yet right now, but this thing is making all-time highs. Regardless, going back 6 years, there's a lot of nervousness among retail investors, and that could be bullish at a point, but we don't know. We don't know. It's early in our sort of analysis of that. Lewis.
No, just what I was going to pass along, guys, is one of the things that we've done is we have a subscription from a data service provider that helps us with some inputs with which we manage portfolios. And one of their bits of commentary that I saw last week or maybe it was 2 weeks ago, was that the contributions from the momentum factor were in the 97th percentile, maybe for a 2 decade period. And that was, of course, before everything reversed recently. So that's interesting for things to have been so lopsided. It was suggestive that things were a little over their skis, you know.
Yeah, what's weird, and go ahead, Michael. Any thoughts here? And then I'll wrap it up on this chart. But this will be live on Stocktwits. It'll be the only place. It's much better to me than the fear and greed, because fear and greed is just doesn't take in the social sentiment of Stocktwits, which is 10 million, a million monthly active logged in users sharing their thoughts on the markets here and nowhere else. But Mike, what do you see this? Because you go back to the Goldman in the 90s. I'm only fascinated by this because it takes into account March 2020, right? So
Yeah.
you have, forgetting if you believe our data or whatever, the fact that we are peaking above that is what was interesting to me, and why I thought, even if our data is a little bit off and not perfected yet, and again, there's no such thing as perfect data, there's just the data, it's saying something.
No, I agree. I think it's a great chart that walks through the context of some of the volatility in recent periods. It would be interesting to see if this could be pushed back, pulled back, I should say, to see how it kind of goes through some of the major moves. We are obviously going through pretty epochal times, and this is great additional context to the traditional VIX. I like it.
Yeah, and the other thing I was going to say, that something that I started talking about 18 months ago, is the degenerate economy, right? We survived the AMC, GME, COVID, populist movement so far, and a reordering of post World War II global structure. So you would think the VIX would do weird things right here, right? And so I think what I worry about is there's just this cocktail of degeneracy and all these fresh tools for younger people with smaller accounts. So I really think it's a great time to launch a social VIX, because it really takes into account how retail and individuals are feeling. My take here is that they're ahead of the curve a little here. They're fearing for the right things, right? From from Trump down to Elon, down to the All In podcast, down into the tech right, or the new tech right. Um, they they don't know. This is the first rodeo for 90% of them politically. Um, they think they understand Trump. How many people have said that before, only to be made fools of? This is Trump's presidency. We joke about Elon being the president, but this is always going to be Trump's presidency, and Elon will only get away with so much. And so people should be fearful. Elon said that they're going to crash the economy. Uh, if the Mag 7 goes down, this might kind of an op-ed, and then I'll stand aside. If the Mag 7 goes down, what does Elon care? Right? He'd love to see Zuckerberg and Tim Cook burn for a while, 30, 40% gains. That's not the game he's playing. So I worry that, and I think our audience has caught on to this. I worry that there's some new things going on that people haven't factored in yet, and one of them being, that Trump Musk combo is a weird combo. Yeah, Michael, you've been around more. Like
Yeah.
that's what scares me. Those are a weird combo in the Oval Office.
Look, Lewis has been on you. We've been in this market for 30 plus years,
Yeah.
and we've seen lots of cycles. 87, there's all the dates we can go down. 08, obviously, etc. And we've always, as professionals, said, "Hey, this fear can be managed."
Yeah.
This time, there is an abyss to this fear. We have not been to these cycles before, because the macro events, in terms of history rhyming, these are things we haven't even seen in 100 years. This is Smoot-Hawley 2.0 in terms of this tariff stuff. I've talked several times on this show about respect and counter disrespect. The markets are moving from practical analysis to the unknowns of human reaction, individually, as entities, corporations, in governments and regions, to, if you're going to poke me in this eye, do I poke you back in the other eye? And
Yeah.
we've not seen this. There is no correlation to this kind of fear in the markets that we've seen this. And
Yeah.
that's why I know
I
we're
love
going to
that.
talk about gold and so on. This is very different. And that's why we should respect that. We should respect that.
We should respect it.
Um,
So I think that is Phil must love that comment too. Sorry, Phil, to chime in, but like what I'm saying is exactly what Mike's saying. This is why I think social VIX is so interesting and why I've wanted it for so long because retail's not that dumb. They notice the poking in the eye, right? They notice. I was watching Jon Stewart last night, and I'm like, I don't like watching Jon Stewart anymore. He lost me at the Apple show. But Jon Stewart doing his old show again, and Jon Stewart having a week to think about what's going on. There's very few smarter people and funny at the same time that are frightened by what they're seeing. Like, all kidding aside, like they just don't know. They haven't seen this, and that's showing up in the social VIX, meaning the market's still doing great relatively, but the fear is off the charts. That is confusing to me.
Well,
Go
one
the
ahead,
other
thing
Lewis,
thing
that
I
and
would
then
add,
Michael.
if I'm go ahead, Lewis.
Go
well,
ahead,
just
Lewis, and back to Mike.
what I was gonna say, Howard, is another interpretation of volatility, right? Is that people woke up and didn't like the portfolio that they had, and they felt like maybe they wanted a different portfolio, and so that's kind of money, money in motion. People, whether
We'll
it's
get to
for
that
good
for
reasons
sure.
or bad reasons, but definitely as we'll talk about in the future, our framework is try to invest in the future and future solutions, right?
Okay, go ahead, Mike, and then we're going to go on to the story of
Thank
the
you.
day.
The other thing I'd just point out is we've been through decades of cycles. This cycle is different because we're going to talk about deglobalization. At no point has America depended so much on the global production engine that allows our top of the heap GDP, our sovereignty with services as big part of our economy. We benefit from $600 iPhones. This iPhone, and it cannot be constructed in a single country. That is what today's environment, the political environment is. Oh, we just bring it all back here. It physically cannot be done at the scale. And most Americans do not understand that everything from the sweatshirt to the electronics to the cars cannot survive at these prices and quantities and qualities at in a world where you have any kind of tariffs of these magnitudes.
Yeah.
Just can't. And this makes the debate over price of eggs. Oh my God, I would
So
love to get
dumb.
the price of eggs back as a debate on the
Yeah.
economy.
Very good point. And for 20 hours a day last week, that's all they talked about was eggs, which is just a further shame about this deglobalization trend. Let's pull up a couple key charts for Lewis. And Lewis, we want to talk about deglobalization and gold and kind of what you talked about the future and how people wake up one day and go, I want a portfolio that stops hurting so much. Um, it's been fits and starts, but there's this underlying deglobalization, and a lot of it has to do with what you've been seeing in gold. So take it away, and we'll tell us what charts to bring up.
Yeah, well, go back to that. There's a chart that shows global trade as a percent of GDP over time. So it's not quite that one. There you go. Yeah. So this is a chart that we've been using for some time. So let me explain it because I think there's a lot of information here, big picture. So what you're looking at is global exports as a percent of GDP over time. And so it starts back in the 1820s, as you know, Howard, I love history. And it goes, I think the most recent chart pattern here is like 2014 or so. And we've kind of been chopping sideways for the last few years. But what I would highlight is a few things. This is a way that we think about this concept of deglobalization. Is I would say, when I look at this, there's at least a couple of big trends that I see. You can see that we were kind of up and to the right until about 1914. That was like the world's first globalization cycle. Um, and then of course World War One, excuse me, happened in 1914, and so that kind of fractured the world. Because you remember there was some gentleman wrote a piece like in 1913, basically saying that war was impossible because the world was so interconnected, it would be such a disaster. And of course that aged poorly. But what you can see is from World War One through, frankly, the end of World War Two, it was chopping down. So basically, that was the first, I'd say, deglobalization cycle of last 100 years or so. And of course, that started with World War One, which was a fracturing of the world. There was the interwar period, which didn't really solve anything. And then finally, there was the conclusive defeat of I guess the Axis powers in World War II. And then basically the statesmen that we had in the U.S. at the time said we don't ever want that to happen again. So we're going to create this unified system that's self reinforcing to try to keep war from happening. And so that was United Nations, that was the International Monetary Fund, that was the General Agreement on Tariffs and Trades to lead lower trade protection over time. That was the Bretton Woods currency system. So it was very much a united way that the people who kind of, after they burnt the world down to the ground and reconstructed it new, that was a self-supporting system that you can see worked like a charm in terms of being bullish for globalization. So that went on a tear from 1944. It was the same level as 1827, right? So that was basically 4% of exports represented 4% of global trade. And then that skyrocketed up to 25%, which was the highest it had ever been in modern periods. And that peaked out 2018, it's been chopping sideways. And so when I look at that, what it means to me is that the actual on the ground data suggests that the forces behind globalization peaked 10, 15 years ago. And what we are seeing now in the newspaper, right, is the quick degradation of what's already been kind of reality for a while. But when I think about this, like the last thing I'd say about this, big picture is it seems to me like we're in another one of those deglobalization periods. And I don't know what puts the bottom in. And so from my perspective, what I really mean by that is that the world is changing in a way that it hasn't changed like in 100 years. And so I think this is going to create a new set of winners and losers. And it's the job is up to us to figure out what those winners are going to be and
Correct.
find a way to invest in them.
Yeah, this show's called Trends with Friends. I mean, it's fun. It's been fun. We're not saying it's over, but you are showing us ways, and Michael's been talking about it, and gold's been doing its work. Bitcoin you could say has been doing its work. Um, and we're starting to see signs of in Europe with defense stocks going straight to the moon. Someone's gotten the message that they're going to have to spend. You only have to beat them over the head. I don't know, 8 years for Europe to say we need money to spend on our own defense. Is that considered deglobalization too, Lewis? When France and Germany are forced to increase their defense spending?
Yeah, no, 100%. So to put that in context, a lot of those defense stocks, Howard, are up 12-fold in 3 years.
Yeah.
That,
So
my
the
friend,
news was
that
out.
my
Like
friend
it.
is a bull market. That's a
Yeah.
bull market, and what it shows you that there is, I think, always an intelligent way to invest in the future. But you really do have to be cognizant if the world in fact is changing, then what does that mean to how you're positioned?
Yeah. And 300% move sounds like a lot, but we've all seen Nvidia and Facebook and other stocks go up 10, 12 times. So this could still be the beginning of the move. I'm just saying this is a trend that finally caught my attention over the last month. We had guests talking about it last week. And, you know, and I don't know if Trump and Elon are smart enough to be along the rest of the world while they pull this off. Again, the cynical side of me says yes, but I can't. I just don't care. Michael, seeing that chart, and he's going to pull up some more, and knowing what we know about Apple and Taiwan and the iPhone, what you just said about, and Trump calls them raw earth, but they're really called rare earth materials. I mean, I thought that was maybe the funniest take from the Zelensky thing. Is he mentioned raw earth like 40 times, and Zelensky's sitting right next to him, and he found it's rare earth. So what really interested me, Mike, about last week is they had a deal with Ukraine. They're going to get 50% of the profits from raw rare earth materials. Like we had the deal. Like if he's such a good deal maker, shake his hand and don't make him say thank you again, and don't talk about his suit. Take the rare earth materials. So what? Like that? No one's talking about that. Why, if he had the deal, why blow it up on TV? He called it great TV. I don't think I want great TV. I
They,
would like just average TV. So, Mike, what are you seeing based on that chart, the raw earth, the iPhone, AI? Like, can do people understand how dangerous this all is?
look, the only thing I can add to that is that, Manchurian candidate, he has a second deal with Putin that basically said, you take Ukraine, don't start with 20%. And there's, because Putin already offered a rare earth deal
Okay.
to the Trump administration when Ukraine and US were negotiating, and Trump, it was in the papers. Putin basically, made overtures And underneath, there easily could be one that if you let us take more of Ukraine, and
Uh,
good portion of the rare earths are already in the Donbass and some of the areas that Putin already has occupied. And
got it.
so the real deal may be Russia takes what they want of Ukraine. It's the Crimea, the whole country, um, or Georgia, etc. Then there's another deal on the rare earths. Then remember, the rare earths of Ukraine are about equivalent to different in some composition to the rare earths in Greenland, which is another thing. Those
Okay, so
two
Greenland must
are,
have raw rare earth as well.
though they have extraordinary rare earth stuff as
Now we
well.
know. I
But
honestly didn't even know until I heard Trump call it raw earth. Like it was just he couldn't even deliver the deal.
and you mentioned Apple. I mean, everything electronic, robots, AI, all the stuff, rare earth up the kazoo is going to be needed. Most of it is in China right now, and right now Europe has a good chunk of it in Greenland, and Ukraine was up for grabs. That was the other big spot, and there is a deal. There's a deal underneath the deal. Would be my only Manchurian
Deal
candidate
underneath the deal. Phil,
assumption.
fascinating. Yeah. I mean, dude, this is page 10 stuff. It's really, really page one, but idiots like me who are looking at price charts because I'm scared of the news are just finally piecing this together. That this is so why is Apple hold anyways? So Phil, anything to add there or we go right to gold?
It's wild. And the chart that Lewis showed before is an incredible way of thinking about the world over a very mega trends. I mean, there's a multiple 100-year chart. And so now, I mean, from my point of view, with Moore's law and sort of this acceleration in technological advancement in travel, communications, information, the larger trend over time has to be globalization. But if we can, but if we can have within that larger secular trend or whatever you would call it, a 30-year period. I mean, these are mega trends, a 30-year period of deglobalization, a counter trend or whatever you call it. Sort of how I was looking at the chart. Man, it's just a massive moving away from sort of the direction that we're all going. And it's just, I mean, the implications are wild. I'm still thinking about that chart.
But
And by the way, for the audience today, if you didn't know yet, we never really formally introduced it. The theme for today is deglobalization. And so
yeah,
this idea that we are in a world that we're not used to seeing.
yeah.
We've all been raised in this world where things are getting faster. You could jump on a plane and be down in Tampa or
And
across the
cheaper.
everything's getting cheaper. Moore's law is a law, TVs have gotten incredibly, the price of TVs have gone down, but
Yeah.
we are moving away from that at least for a while. And it
Yeah. I
just
think
looks
people
like
need
that.
to like I said, like when you have people like Chamath, a complete grifter, but a guy who can look at a PDF and memorize it and spew it back in English, now coming out as like a spokesperson at the All In for Trump and Sachs and say, you know, the market may not bounce. Like in his elegant way of just cheese ball saying, uh, be ready for a crash, right? They're starting to make, we didn't used to talk like that. We used to say the Fed's got our back, BTFD. Not that I'm saying that was right or wrong, but we are changing the lingo. These are people that are literally rooting for a crash right now. And you got to take them seriously because Chamath did not make that up. He doesn't have an original thought. That thought came from the White House and from Elon and from Gerstner. These people, Gerstner knows how to read markets. We talked about it 2 weeks ago. Austerity and tariffs are not good. Now, he didn't. What Brad Gerstner's not going to pull up is a chart of gold, and he's not going to pull up a chart of deglobalization because Gurley and these guys, that is not. They're great at doing what they do and talking about AI and China and how these things are right, and that's why Michael's on this show. But they're not taking it to the next level, which is what is the bigger theme that happened? Don't just be worried about austerity. Where does the money that needs to get put to work go in an era of austerity? And that's where bringing Lewis on helps. So I think we should talk about the gold inflows. Maybe can we pull up that chart and Lewis just like high level walk us through some of that data?
Well, and while
Go
that's
ahead, Lou.
coming up, Howard, I would just add one comment. I think this is something you and I've discussed in the past that if you, the framework with which we try to approach investing is that in retrospect, you can almost describe the market events of a decade in like one or two words, right? And so, like the 90s were, internet bubble, right? 2000s were kind of the industrialization of China. The rise of social media or the iPhone cycle has been the driving force, say, the last 10 or 15 years. And so it's my contention that if there's going to be my vote for the one word theme for the next 10 years is going to be deglobalization.
Yep. And that's why we're
So,
attributing the show to you. So let's keep going on that
okay,
topic.
right. Well, so
The-
the chart that you guys, to your credit, you're got your finger on it. So this is kind of interesting because I've been watching this myself. So that's gold. This inflows into the GLD ETF, and of course, this is I don't know, 60, 70, 80 billion dollar ETF market cap. It's the world's largest kind of metallic ETF, of course. And so the neat thing about these ETFs is when people decide they want to invest in it, then the people who manage the ETF literally turn around and buy physical and store it in vaults in like in London and so, for instance. And so what it can do is impact supply and demand. But the most interesting fact that I look at when I see the data in front of you is that this was, I guess, a week ago, Friday, is you had this biggest single day of AUM inflow into that ETF well, actually bigger than COVID, right? So biggest in the 8 year
That's what I'm saying.
history.
Like the social VIX, you've got now
Yeah.
these spikes as the trend started, as gold trend started in late, early 22 with those spikes. Now you have a super spike. I don't know what it means, but this is not the beginning.
Well, I think big picture, what I take from that, Howard, right, is again that people wake up and they see something and they think, maybe I'd like to own a different mix of the things that I do right now, and so they're trying to invest in solutions. And in this case, I mean, I would agree with the people who are investing in that. In that, we think it's a smart investment for a deglobalizing world.
Okay. Mike, go ahead. Can't believe we're talking about this, but how could we not talk about this? This is so obvious.
no, I love this chart. I would just again widen the aperture. Gold is the several hundred year store of value place. It's the epitome of our global economy over history when the world was never globalized. This notion of globalization, that's as we had in the earlier chart, that's just a phenomenon of the last 60 or 70 post World War II era. I I was born in India. I just came from there. The My family has been in the gold and silver trading business in the state of Gujarat, Modi state, for
Wow.
150 years. Gold is a returnless asset unless it moves up and down. With the signals that we're getting from this is the world is saying we're going from a prosperity oriented economy to a non-prosperity economy where this is the equivalent of putting money under your mattress. There's no
Yeah.
productivity. The money doesn't work for you. There's no compound interest.
Yeah.
It's just a way to preserve value in where that and a shotgun gets you out into safety. And that's where we are right now on this gold signal, in my view,
Uh,
globally.
And
Lewis, go ahead.
by the way, gold's making all-time highs here. It's not
Yeah.
like
Yeah.
we don't have a
Well,
chart of that. It's a
We'll
little
pull it
too.
up. We'll pull it up. But Lewis has some
Yeah,
charts.
yeah. No, look,
And I've been long, like full disclosure, if you follow me on Stocktwits for the last year and a half, not proud of it, but like I don't know what it is, but it's not in my degenerate economy index, but it is one of my holdings. Not a huge holding. It's just been a 30% gainer the last year. I'm not
so
complaining
forty
because it's a
percent in a
trend.
year.
Oh,
Forty
it's up
But
percent in a
40.
year.
look,
Yeah.
all
Well,
sophisticated investors would have 5, 10, whatever percent in gold. The problem is the other 80, 90% of most people's portfolios. Gold going up is bad for everything else in your portfolio because it means that the
Is it
returns
for
on
sure?
everything else is.
well.
Because it's not big enough to be bad for your portfolio. It's not a big enough asset to be bad, Mike.
No,
I know what you
I didn't
mean.
mean,
I know what
no,
you mean.
I didn't mean it in a swap. I meant it in
Yeah.
terms of there are less productive places to invest for normal people. Maybe the chamats of the world are smart. There are very smart and billionaires who've done the big short type of stuff in this market against this thing. But in a world where people are going to trade less, people are going to pay higher prices for things, consumption is going to go down. That's half, two-thirds of most countries' GDPs, except
Yeah.
China, which is 30% consumption.
Well,
But
to me, I mean, reasonable people can disagree about like the message from the gold market, but the point that we were discussing before we went live and everything, right, is that a 40% increase in the price of gold in U.S. dollars that's taken place in the last year has only
Wow.
happened 5% of the time in the last 100 years. So what the gold market is saying is that something is changing or something has changed, and so. What this
exactly,
means for me to try to invest in solutions and kind of shepherd client wealth, right, is that is that we should have a forward-looking view and say it's not what matters is not so much whatever world we were in and whatever the market was rewarding, because really that's what price action kind of is, right? Price action is people putting money to work, moving from one thing to another. And so I think a reasonable way to think about trying to invest intelligently in a changing world is say, how might the world change? And let's own some of that and be rewarded for having that earlier insight as other people come to share that view.
Correct. Meaning you don't have to be first, but don't be last. And so you're not first in this trade. We're waking people up. This has been 2 years of you and I just chatting
Oh,
quietly.
100%.
But now I'm like yelling at people and having you on regularly to say, how do we get in front of this tsunami of change, which we may not like, which Michael's saying we have not come to terms with because the iPhone is my kid's lifeline. No, he is not waking up worried about this. He's worried about hymns, the price of a Uber versus a DoorDash. He's worried about Waymo. Mike, what do we not see here? What can Tim Cook can't? This is a boots on the ground thing, right? And we're going to try and tie it all together with TSM and Taiwan because I was talking to my friends in Taiwan, and I do have friends there. Um, and they're wealthy and they've been worried in the past, but they're like, nah, America needs our semi needs. Is that so? Is our government switching from we don't want boots on the ground in Europe or the Ukraine, but we're happy to have boots on the ground in Taiwan? I mean, are we saying that out? Are we saying that quietly? Like, are we telling people where we're willing to fight without us listening?
I don't know if the people in charge have ever even thought about boots on the ground by just addressing your question about iPhones.
Uh-huh.
The iPhones, we're in a world where the iPhones in the US could potentially be 40-50% higher than the
Got
iPhones
it.
sold or Android in China and in
Got it.
India, but China especially. And we've never had a world like that in last 20
Got it.
years. We've always said cheap electronics everywhere. And
Got it.
and it's not just about electronics, it's a tool of life. And that is the world we're potentially
Okay.
looking at, because we can't make them here at the prices that we've been used to.
Got it.
And Tim Cook, despite his amazing negotiation, allegedly investing 500 billion in the US, he can't pull
He
that
can't get
magic
there in
beyond a
time.
few
That's a 10-year
percentage.
investment. Yeah, yeah, yeah.
It
And
cannot
Lewis,
be done.
anything to comment on that? Is what this?
Well, I would just build on a point that you had begun to make, Howard, which is kind of where might we be in this cycle of change or performance or whatever. And I was just going to talk to the chart that's up that I'm looking at right here, which is the gold price relative to the Dow Jones Industrial Average, which is
You
a
got to
chart
be patient to be looking at this one, but keep
that we
going.
use. Well, look, it's well again. I love history. It's a 100-year chart. It's a 100-year chart, and so if you just look at the math, we are under what is a flat 200-month moving average,
Mm.
and we've just crested
Phil,
over.
Phil's getting excited. Go
We,
change your
we've
sweatshirt,
we've
Phil.
just crested over. I think that's a 50-month moving average and a 100-month moving average, and it looks to me like it's the bottom of the range of a 100-year range. And so my interpretation from this says I don't think I'm late to having this view. It looks like
No,
perhaps
you're early. 2 years
you
is
know, I
early.
think I'm kind of early. It's just my interpretation. It looks like it could work a lot higher if you take a look at these other periods. And so to build on a point that I think Michael was raising. So remember, like we showed that first deglobalization period that was in starting in 1914. It didn't really end until like 1944 or so. Well, hey, look at that. Gold really outperformed the Dow Jones Industrial Average a lot. It went straight up over
We,
that period. And then the
what would our country
70s.
look like, Mike, if this thing just doubled? I think our country would be in chaos. Like we're not. Forget this massive spike, Phil. Look what this. If we get above the 200-month moving average, this country is just going to be clamoring for fucking. Well, there'll be midterms by then. I mean, I can't even think this
Well,
far
No,
ahead, but I
well,
think
look,
you have to respect this. I think you have to
what
respect these big trends. I think you have to respect.
what I would say, Howard, what I would say, Howard, is like that in there's a great quote from the gentleman that created quantum physics, right? And he said that prediction is tough, especially about the future, right? And that was Dr. Niels Bohr. And so I've been doing this long enough that I've made a ton of mistakes all over the place. But this is one of the reasons I love to look at a long period of history, right? And you guys have probably heard that saying that there's no bad assets, there's just bad prices. And so I'm kind of in the
Love
business
that.
of trying to invest in the future, for clients that might not want to have their capital risked in the markets, but that's what they need to do to generate income and the success that they want in the future, the lives they want in the future, is to try to put that money to work thoughtfully. And
Go
so
ahead.
when I just look at this, I mean, good, bad, and different. I mean, that's not my call, right?
Right.
My job is to put money at work thoughtfully on behalf of clients who are trying to seek a better future. And so when I look at this, I think this seems like a reasonable thing to invest in. And then if you're in fact correct, or your fears, like maybe that's a tougher world, well then, well, love of God, then I probably really ought to be investing aggressively on this part, right? Because I need to try to balance those risks on behalf of clients, because that's what they're trying to achieve, right? And so I just view this as it's one tool in the toolbox,
Yeah.
and I just use this, and I share, I think, Phil's framework that there is a kind of a logic and dispassion in terms of charts and stuff, because what that is saying, it's the vote of the market. Like, people get a vote, and like, think about this chart. People get a vote. What do they think the gold price should be? Everyone on the planet gets a chance to vote on that. What should the Dow Jones Industrial Average be? Everybody gets a vote on that. And so what this is the cumulative sum total of people voting.
Yeah.
And this is over a long period of time. And so if the world is
and
changing, which is our view,
Yeah.
and that's going to create a different set of winners, then I don't know why I wouldn't be thinking of how to get thoughtful exposure to this.
Yeah.
and
Go
to
ahead, Mike. Go
Lewis's
ahead, Michael.
point, and to Lewis's point that the market's voting, we saw the signals at Costco. I mean, gold bars have been one of the hot selling
Yeah.
things
No,
next
it's
to the
not a
eggs
fresh
for the
signal.
last year or so.
So let me end this part and we'll move on to the next part by saying, listen, everybody, this is financial advice, even though it's not. If you follow me on Stocktwits, I talk to Lewis. You don't have to talk to Lewis. Phil and I have been talking about this. We on Trends with Friends a year ago. We got long. Phil got long China. I got long China. It doesn't make sense to us. Doesn't mean you have to put 100% of your assets in it. It started making sense to Phil and I last year. Have mistakes been made? Yes. The fuck am I not doing buying Europe defense stocks? I'm ashamed of myself, right? I just don't follow the markets closely enough. But the warning has been made. You have been told how the world works. Every time you hear the word deglobalization, you must be thinking about gold. And doesn't mean you should go buy gold today. You can use moving out. You don't chase assets, but gold will still come in. It may not, but it will still come in over time. And that is when you have to start reminding yourself of the 100-year chart saying, don't panic on the first dip in gold. But also, you will panic less if you don't chase assets when you hear about them from people like us. You have to have some discipline. Go ahead, Bill.
Go ahead, Michael. You have one more comment, and then we're
Yeah,
going to move
Mike.
on.
No, the other word to add to deglobalization is re-blockification. What do I mean by that? Europe is getting kicked in so many ways. For 50, 60 years, they've been able to get away in a frozen state, like the US 13 states that couldn't decide whether they want to be a country or not. At this point, they have to make that decision. Because
Yeah.
defense stocks buying in Europe is right. But what they really have to do is unite as an entity. They've always been an economic bloc, not a political bloc. They have to become a political bloc. I'll just add one more thought. I've done the numbers on this. If you look at Canada, that is being estranged from the United States, and we've talked about this. And
Yeah,
Canada's
I'm not
Canadians for
happy
the
about
first
what I'm
time
saying.
are
Yeah,
like, what the hell is going on with
yeah,
our relationship with America? Because they
yeah,
thought they were North America.
yeah,
Canada was a founding member of NATO. So was Turkey. These are two countries that are not in the EU. And Turkey was begging to be in the EU. If, on a theoretical basis, if you added Turkey and Canada to the EU, the EU as a more political bloc would be 650 million people with, and they, if they did half our spend on defense, it would be over a trillion.2 defense budget. That's
Yeah, but
2x of the US. So the world that I'm describing, they never had a catalyst to get their act together to look out for their own interests because America was there. That has changed. And if especially if Trump is there for a long time, if it's not, then they can go back to the old ways. But these are huge catalysts that we've never seen in any cycle before
yeah,
in 60,
I
70
didn't even
years.
think about Lewis. Go ahead, and then I have one thought, and
Well,
then
well,
we'll
no,
move on.
I mean, that's the way I'm trying to engage with the trends that are underway, or at least I think are underway. Right? Is that the world is constantly changing, and so if the Europeans woke up and they were like, oh, we need to change, like we've fallen behind, we haven't spent enough. I mean, that's all change. I mean,
They
the
got
price
together
hike.
on a Sunday. We're making
Well,
fun of them, but that's like they
I
needed to
mean,
get together. If they're gonna fucking get their act together, this would be the moment. Like you
so
can't
if
just make
so
fun of
if
them.
the
We told
world
them to
is
do
if
this.
the world is changing and then spending patterns are changing, that means that the world ought to be finding a way to reward the people who are providing solutions that the market is now valuing. And so that's an opportunity. And so, I mean, we invest globally on behalf of people. And frankly, when I see these changes taking place, I mean, I feel good that these people are finally kind of getting kicked in the ass and doing something about it. I mean, it feels like an opportunity for me, honestly.
But do we want Germany? I just don't get it. Germany has a history of blowing shit up and starting wars. Why are we thrilled that they're going to go back militarizing? Like I still don't
It's an
understand
unintended
what
consequence.
type of chess is being played
There's
where
no chess.
Canada is building up arms, not donuts. I just don't. It's funny. It's not funny though. Like Canada has a place in this world is to be friendly and a friendly
And
nation.
The-
our largest global trading partner.
Yeah. Anyways, go
There's
ahead.
no,
There's a
yeah, there's no chest. There's just ego. Let's give
Yeah,
a shout
there is
out to
no chess.
Let's
There is
give
no.
Shomik. Michael said that, but I just added there's ego. Let's give a shout out to Shomik from last week. I think we have a tape there. Our guy was on European defense stocks all
Yeah.
over them. We had him on last week, and they're just going crazy now. And we got European leaders talking about rearmament, and it's going bonkers. Let's just get him. We have this queued up.
Trends with no friends. So we've talked a lot about tariffs, right? What that all is nationalist policies, right? It's my country is the best and nobody else.
Yeah.
And so what that means is that in the NATO sort of thing and stuff like that, we have this dynamic where we're going away from the U.S. is the world's protector and does everything like that to each country now needs to protect themselves. And this is happening in dramatic ways. And so Rheinmetall is predominantly a German company, although they serve many countries across Europe and actually the U.S. as well. But Rheinmetall is a German defense company. It is taking off.
Yeah, I think
Yep.
again, be careful about chasing. The point is, our job here at Trends with Friends is really we talk amongst ourselves, hope people listen, people do listen, but man, there's always a bull market somewhere, as Kramer used to say, and it's our job to try and kick some old habits and not get kicked in the teeth. We are really long in the tooth, believing FANG and believing in that globalization trend. We've become believers in the Nancy Pelosi tracker. And I think that's under Trump's skin and Elon's skin. They think they're better stock pickers than them. There's just so much sickness that could be possible. I try not to think about it, but like the fact that I'm thinking about it goes to Hollywood. The fact that they can come up with stuff 40 years ahead of time is because they have egos and they have stories to tell. And this concoction of Trump and Musk in the White House is not something that I think people understand because I sure don't.
The other thing I'll just, because you mentioned Chamath, and look, there are 3,000 billionaires in the world, maybe a third
Yeah,
of them
they're
in the
one of them.
US, and they're all very comfortable. They can
Yeah.
all, in a sanguine way, say, "Oh, there's a little bit of a crash coming,"
Economic crap.
but half the country has less than $400 in the bank. I mean, they voted in this Trump fellow on the price of eggs. What do you think happens in by the midterms, as you pointed out, Howard, when everything is up 10, 20%? We've not seen inflation like this. This is Lewis's gold signal right there. It's that's it's point A to point B.
Hey Keith, let's just show a couple more of these European defense charts because
There
he
was a great
mentioned a
chart
few
by
other tickers.
Bucco. There was a great.
Well,
He
then,
mentioned a
wha-
few of those tickers, and while we're just sort of scrolling through them, plus there's an ETF that we found. Lewis, why don't you your take here?
no, just I was gonna, point out in terms of again, just
Wow.
trying to think about intelligently putting money to
EUAD.
work on behalf of clients or whatever. I mean, these European defense stocks, many of these are up 12-fold in 3 years. I mean, that's real money. One or two of these in someone's portfolio is going to make a huge difference to their returns. And so, what we try to spend. This is why we believe in internal research at our firm, is that we think if we can spend enough time, we can try to identify, or at least we're seeking to identify these things where the ownership of these things can make a big difference in people's returns. And so again, if the world is changing, I mean, I like that. I think that's good. I think smart people that have their eyes open and are working hard can do really well in an environment like that. Rather, it to in my way of thinking, that's a lot better than like a Mag 7 market where they go up mindlessly every day.
Yes. And go ahead, Phil. And do we move on?
Yeah, so I think we also have. So this is the EUAD. It's an
I can't
ETF.
find
It's
the
a
ticker,
European defense. What's that?
I can't find the ticker, but go ahead.
I don't think the ticker's on Stocktwits. I think we have to go. It's small, so warning. I mean, what Keith? What was it? It was like 60 million AUM, but all of the holdings are ADRs. All of the holdings are large companies, so it's not like it's a small fund holding small stocks. It's a small fund, so there will be liquidity. I mean, you could go in the market and buy this thing.
We'll have Riley whip up a list of European defense stocks. The fact that we're whipping up a list means that you shouldn't buy the list right now.
No, we have a list. Don't we have somewhere? There it is, right there. So I mean, look at these companies: Rolls-Royce, Rheinmetall, we talked about, BAE, Airbus, a giant company, Saab. These are large companies with large market caps. Real companies. And so this is a pretty interesting play. I mean, nice little sleuthing to find this fund. And again, it's moved a huge amount already. So you don't want to just go in crazy. But
and people can hit me up for Lewis's email. Lewis, name of your firm and just quickly, and we'll share it with everybody.
Sure, yeah, it's Capital Wealth Advisors. We're headquartered here in Naples, and again, we've got about 60 people or so on the team now. I post periodically on Twitter, just trying to share things I think are interesting.
Here's how funny. The first time I met him, I went to Naples, Italy, Phil. So it was I missed the meeting, but I had a hell of a fucking week.
You ate great.
I killed it. And the VIX is always 4 in Naples, Italy. In Naples, Florida, it occasionally rises to 20 when storms come. But okay, so let's move on to things that are a little more interesting to do. By the way, that is sadly interesting to me because the way I think about gold is how Michael thinks about gold is like, could I be doing something less productive than that? Right? We talk about let's build things. And everything the opposite is happening, By the way, people are building things. I'm just saying there is nothing sadder than gold going up for some reason to me, because it has no cash flow. It doesn't do anything. But you could say the same thing about Bitcoin, and that's had some incredible returns. So the other thing I was going to say, it was interesting. Steve Strauss said something last night, guys, that like the headlines in the history of headlines for crypto could not be better. Right, you got Sunday pumps going on by the president and his kids. Like, what could be bad? And there's nothing but them going down right now. So be very, very careful what you wish for. The single issue crypto voters that seem thrilled to have Trump, what were they thinking?
And even the strategic Bitcoin, I mean, the crypto fund that they were hoping for, it comes out and they forgot to add Bitcoin in the first announcement.
Yeah,
They
because
they
it's
put
all
up.
a grift. They wanted to juice. The CME futures moved 10%. You when you trick the CME, which is it's not like tricking Poly Market or the Democrats. When the CME has a 10% gap in the futures market, you've broken the casino, and that's not fun. We need the CME to work. I don't know what they're trying to break, but anyways, I just some of the childish stuff going on just to say they could do it.
One last chart that I want to throw up there regarding this trend in Europe and the US is, sometimes you get trend changes around the new year. And so we have this one chart with comparing European equities, China, and US stocks since the beginning of the year. And all of a sudden, and so by way of comparison or just history, the US has been outperforming Europe and the rest of the world, since Lindson's bar mitzvah, like going
Yeah.
back forever. And all of
Yes.
a
I
sudden,
killed at that
I-
event. I
yeah.
killed. I fucking
And
crushed.
so, but since the beginning of the year, all of a sudden, look at this. The Golden Dragon China index is up 12, 13% so far this year. The stocks Europe 600 index is up 10%. And meanwhile, with today's action, S&P is flat to down for the year.
Yeah. What do you think about this, Lewis? Because this goes to
Well, no, look,
deglobalization and then Michael.
I mean, you know, I share Phil's framework in this, right? Like, again, like society progresses. Like the job of the market is to help society progress, and the way it does that is it puts capital behind things that are creating value for society. This is the purpose of the market, and so for the longest time, like where the market's emphasis was, because it was voting and making these U.S. stocks outperform, it was just U.S. Mag 7 every day, every day, every day. Well, not only is that boring, but what that suggests is, I mean, after 13 years of dramatic outperformance, I mean, it's not a crime that other asset classes are starting to work now. I mean, what that means is you just have to sharpen your pencils and get off your ass and maybe do some homework in terms of
Yeah.
finding something that is inexpensively valued, ideally where the future is kind of getting better. I mean, that is not a bad thing. I mean, it's a bad thing, I guess, if you're lazy, if you're not looking forward and trying to invest in kind of a changing world. But I kind of view this as all opportunity, and it's
Sure.
great. Like European equities, a lot of those were flat for like 20 years. I mean, just ungodly, boring. But these things are now kind of working because, in my view, the world is changing, and so the market has a vote. And again, what I think it's representing is that as the world's changing, the market is trying to reward a new set of winners. And our job, if we're going to be thoughtful investors, is to try to find those.
And we had some early signs, Eli Lilly, Novo Nordisk, drugs. Go ahead, Michael. And then I do want to move on to Waymo and AI,
You
some
know,
fun things.
you know, I just wanted to add, we've been talking about gold, economy, macro, deglobalization. The thing we haven't touched on is energy, right? Why do I bring it up? Canada, 25% of our refining capacity. I mean, if the tariffs are 25%, guess what? Gas prices in the US are kind of going up pretty fast. And that is a political issue as big, probably bigger than price of eggs. And I just want to point that out, especially when the new administration is absolutely curtailing everything having to do with wind, solar, etc., which was already we were already leading in our production, especially in Texas, my home my current state, in terms of alternative energy, and all of that is basically gone. We may be able to pump drill baby drill, but we can't refine the drill baby drill product at the rates that we need. That's which is why, we've been importing stuff from Venezuela and Canada, and shipping it to refine there.
Yeah, this is just all goes to this deglow. Things are going to break. Things are going to
Well, and
break.
but remember the other thing too, Howard. Like the first, say, 10 or 15 years of my career, the big change was the industrialization of China, and the U.S. market went flat for 10 years essentially. International stock markets boomed. Commodities had a great run that put money in the pockets of millions of people who were invested in those sectors which had been beaten down and left for dead. And
Mhm.
those sectors are not that different right now in terms of beaten down and left for dead because people have found more interesting things to talk about. And so I do think that cyclicality is behind so many things. And remember the what the market is trying to do, right, is to capitalize sufficiently what the market believes are going to be providing solutions for people. And so if we have historically uninvested in things like refining, and we totally have, like U.S. refining capacity is basically unchanged for the last 50 years.
Oh, yeah.
So maybe we need more of that, right? So that might not be great for someone's tech stock, but it's probably pretty good for refiners. I mean, if it's going to be money that they can put to work, and so maybe if you own a refining stock, you might do okay in that if that world is in fact changing in that way. I mean, it's different forms of opportunity, and our job is to find it.
Yeah, I think the only interesting area remaining in tech because is small business. The media companies like us, 4 people, 10 people, 20 people who are using products that have never been easy to use, whether it's Beehive and Riverside and Spotify. So I think that's a growth industry because we have plenty of stuff to talk about, and there's plenty of experts that have never been on TV that are never going to go on TV like you, Lewis, and Michael. And so I think that's a growth area, even though it may not be sexy. The second area is really AI and compute and inference. I'm a little discouraged if we pull up this one chart of the SMH versus the SPY. So the semiconductors are acting as if there is some bigger problems. NVIDIA is below its DeepSeek panic price. So you do have this financials are kind of caving a little bit today, actually, but the semis have been leading for what is it, 7, 8, 10 years. That doesn't look great. Doesn't mean it's not a bottom in here right now, but they look heavy. They look very much like a heavy stock. And with all the background chatter that we've been talking about today, don't be surprised if there's no bounce, right? Like these things are richly valued. They're in high demand, of course, at NVIDIA, but that doesn't mean prices can't come down. Michael, anything that interests you here?
Yeah, look, I'm still bullish on Nvidia as a secular play, not a stock recommendation. But in a world where even ASUS, one of the biggest PC vendors in the world, China, said before these tariffs, said we're going to raise prices 10% across the board on PCs, on laptops. My God, these things are supposed to do nothing but go down
It's
in
supposed
price
to be
every year.
free. They're
No,
supposed to be
exactly,
free at this
and
point.
they're raising 10% before the tariffs.
Yeah.
We are in for so the reason I all jokes aside, it means that the tools that we're going to need to use this stuff is going to get more expensive.
Yeah.
Okay, and Nvidia, they're going to have to raise their prices probably, or they'll eat it in the margins. But that $100 billion investment by every company out there that's saying, oh, we're going to invest 100 billion, they're going to get 20-30% less compute potentially for the
Yeah.
100 billion, because the
Yeah.
prices for everything underneath comes from everywhere else in the world. And not just the chips, but the memory, the storage, the cooling, the assembly, everything. And prices are that. What gets me is that, look, AI was supposed to add 7% or 10%
Yeah.
to the global GDP
Yeah.
in 10 years. If we had globalization, or not too much mucking around with globalization.
Yeah.
With this deglobalization, for however long it lasts, that number, is a question mark. It's an unknown now. And that's, we are pushing out into the future the possibilities that we have in terms of productivity improvements, that for no logical reason. And that's the
Well,
tragedy
the
of
other
what's going
thing, the
on.
two stupidest things, and I hear stupid all day out of Trump and all in podcasts, is that we have to be the leader in crypto and we have to be the leader in AI. What
Cannot be.
planet are they on? Does China not all of a sudden have no engineers that are fed by the government? Does Russia no longer have Telegram and all their entrepreneurs creating apps for crypto? Are we delusional? Like, we should be good. We should understand crypto. We should understand AI. We should encourage our entrepreneurs to create open AI. But we're not going to win anything, especially
Well,
deglobalizing. Go ahead, Lewis.
well, Howard, what I would like, I reach back into my memory banks and I think of when I first joined T. Rowe Price 25 years ago or something, and the internet was becoming undone. Right, it was a huge bubble. It did in fact change the world. The internet was a thing, right? But but what I'm talking about mechanistically. So what does that mean? Like once the tide started to go out, um, trillions of dollars were concentrated in U.S. high tech because that was the thing. And then what happened is when the market decided it needed to start rewarding the new set of solution providers, a little bit of trillions is enough to make stocks double and triple in strange places that you've never heard of. And so the money that flew out of tech at that point was the raw material for people to have investment success in other areas. And I don't know why this won't be any different
Yeah.
in terms of this is trillions and
Good point.
trillions of dollars in motion. And so I think the job that's in front of us all, if we were trying to outperform, right, is to figure out where might that money go, what might be those solutions. Because if you get that right, there's trillions of dollars that are trying to find those new solutions that has been trapped in one sector for the last 15 years.
Very good point. Very good point. Do we have enough, or do you want just a little bit more on Waymo? I know
Let's
I've been.
let's just talk about Waymo because it's just such an interesting story. So Waymo all of a sudden is doing 200,000 driverless rides a week. It's just
I finally
incredible.
have done it. I finally have done it, and I loved it.
Great experience. Took you from one place to the other. No driver.
Yeah.
No nothing. No friction.
By the way,
you just used the app and you got in, and the whole thing is wild, right?
I had 30 tequilas, threw up. Nobody yelled at me. The Waymo did call my wife and say you got a drunk person coming home, but
throw it right in the back of the car, right? No problem.
Yeah, I did have a weird Uber experience. Listen, I think too early to call because I just don't think Waymo on highways. And listen, I'm seeing it in Phoenix. I live with Waymos. There's more Waymos than Teslas. So I couldn't. If you had told me that was going to happen, I would have fucking made fun of it. So I try not to make fun of things because it's phenomenal, Waymo. But obviously, there's going to be problems, math and etc. But Mike, take it away. What I'm fascinated by is the friend of my friend, and my friend is my enemy of my friend. Like the partnerships are going to evolve because it's. I've added DoorDash and Uber to my degenerate economy portfolio, not because I think they're undervalued or because I think we now have Elon there's just partnerships to be had that wouldn't have been had 3 years ago. Everything's up for grabs, as Lewis would say, and new partnerships will be aligned in a deglobalized world, including even in the U.S. So, Mike, what do you think about all this? Because Tesla has the lead.
Full self-driving now brought to you at scale by Google. Okay, that's the headline. Not Tesla, despite 12 years of robotaxi and full self-driving and all that stuff. Google. And they're doing it the hard way. These are expensive cars.
Yeah.
$200,000-$300,000 per unit. It'll take a long time for them to break even on that stuff. But you're totally right. They are an Uber delight moment. If you remember the first time you got an Uber, walked out and didn't have to touch your wallet.
Yeah.
I did that all in India this past week. And it works. It's magical even today. And that's what self-driving cars are. But Google has brought it. Hard work, lots of ups and downs. And it is still, I will remember when I was in a Waymo, getting in, the drive, getting out, delight, magical. And aside from the business aspects of it,
and a world without control, Google could buy Uber and DoorDash. Like anything can happen right now.
The thing I was going to underline is that it highlights what you and I we've all been talking about the show for a while. Google is the underappreciated asset on AI and a lot of these things. They have lots of these pieces which they can spin off, etc. And Waymo is a success story for now, on at least on an operational basis for Google, which is
the question is, will they like with broadband give up? And that's what I'm worried about.
They could. That is Google. That is Google. That is
that is Google. I want to trust them, but like they're burning money. Those cars are not cheap, And this is and Elon can raise money like no one else before him. So Google's going to have to play in this game, and I think that's why the stock is underachieving, because does Google have the balls to stay
No,
with them?
that's why I've been saying top of my lungs. Google board, think spin-offs. YouTube,
Yeah.
Waymo is a slam dunk because
Yeah, go
all the
take on
lawsuits that are going to be
FSD as a
monetized.
single company. I bet you would get a
Yes.
multiple for it. Go ahead, Lewis.
Oh, the
That's
thing's
interesting.
worth $5 billion. Yeah.
Well, I was just thinking about, if there was anything else I was going to try to, leave you guys or say your listeners or whatever with. Like I said, in 25 years, I've made a lot of mistakes. Getting the future right is really tough. But one of the things we try to manage risk while we're trying to do thoughtful things right is this concept of valuation. And so back on the theme of like people that maybe haven't had a great 10 or 15 years, we talked about commodities, we talked about international, and frankly, value investors, like all three of them who are left out there after the 15 years of hell that these people have been through, if there are three of them left, that's we're talking about like perhaps a whole new set of winners. This has been our framework that as the world changes, like the markets will change, it will reward a new set of leaders. And I guess good or bad depends on when you sit. Like if you're a value guy and you're still alive, you you've probably been, your knees are bloody for praying for this, right? So those guys might be pretty happy as the world is changing, and so again, like you can complain about it, or you can just face reality and find a way to try to be successful in that changing world. And so I think, all these things are tools. Thank God the markets have, thousands of securities and ways. Hopefully you can try to see where the future is going and invest in it. But valuation and value investors is a whole nother, we could talk about that for hours.
Yes, and we will. We'll have you back. Go ahead, Mike. I mean, so Waymo, cool. Like I said, I think if you look at my degenerate economy index, the front end of those are getting hammered, the Robinhood, the Coinbase, the DraftKings, but the meat of the portfolio, CME, CBOE, ICE, Apple, Google, have really been a great hedge, even though we're seeing the deglobalization, because for now, I'm really starting to think through, guys, how do I build a deglobalization index? So I'll talk to Lewis about that, or do I mix degeneracy with deglobalization? But I don't think degeneracy goes away with horrible U.S. policy, right? The peer-to-peer, crypto, gambling, sports, good media. So again, it does, there's a lot of things still working and a lot of things that can still work. You need to start taking Elon and Trump seriously, and really taking a look at some of the stuff that's just been working on buy the dips, because it may stop working. So I think that's enough for today, boys. I'm going to let everybody go. Phil, anything that we should be
I just
thinking about?
I had two quick comments sort of on the psychological end of this. Number one, to go back to sort of Lewis's main theme today, the world is changing. Humans don't process change efficiently. We are slow, and I know I've talked about this in the past, but it's a perfect time to bring it up again. It's a super important point when we are in an environment of massive secular change, shifting. Humans are like Commodore 64s. We are slow information processors, and we don't quickly shift. We're slow to shift. And that's why when you look at some of these charts, when you look at gold making all-time highs, when you look at some of these crazy European defense stocks that look like they've been going up so much, it doesn't mean, just because they've already gone up, it doesn't mean that they're done going up, because we are slow to adopt new behavior. So that's why trends can last for a very long time. So the last man is not even close to being in the pool. That's number one. Number two, one other point. We are entering not only a period of deglobalization, we are also entering a period, I think, of self-reliance. Everybody's on their own. Howard had a post last week at slide 5, every man for himself. I'm not quite, this is a piece of art that's hanging on Howard's wall.
My wife hates it. So just so you know, Phil, she's in your camp, but that's not why I bought it. It doesn't represent that I believe this. I just am telling my kids this.
It's hilarious.
Yeah.
It's hilarious, and I don't buy the tone of it. It sort of has a cynical tone.
Yeah.
The way that I would frame it is more of self-reliance. We are entering a period of massive self-reliance. In a way, it is everybody for themselves. But
Yeah.
even more, it's this idea of, listen, we're in the environment that we're in. Things are getting really weird. Take care of yourself.
Yeah.
Look
That's the
after
way I mean
yourself.
it.
You take care of your body, take care of your family, take care of your business, work really hard, and put yourself in a position where you are, where you have some buffer between sort of the hard things going on in the world right now and yourself and your people.
Quickly, I was going to check because with two kids, I own and operate two millennials, and Lewis has three boys of his own, and Phil doesn't know how many kids. Phil's like Elon; he has 60, 70 kids. You only know by the unibrow if they were fathered by Phil. But what I was going to say is, in talking to my kids, my son gets it because he's selfish, and we've worked on him for years to like be empathetic and not selfish, like their dad. My daughter, on the other hand, went down the other rabbit holes. Everybody, everybody's out to get me, or I can't believe they're doing this. And for the last year, I've had to talk to her. I said, this is a moment for you. I said, Elon and Musk do not care about you. Stop thinking that they care. This is your moment to start doing things for yourself, right? You got to live your life and put yourself in a position to make good decisions. Stop worrying about. That's what I mean by every man for himself, right? The artist has his own meaning, but that artist is special. I know he's special because I discovered him. We've chatted a lot. He's very funny. He reads my newsletter now and has caught on to all the things, the lingo. So we're going to see some cool art coming out from him, like softening, like taking what he thinks and seeing it through the eyes of an investor and someone who's trying to think more friendly, right? Because you're right, it is a little cynical. So when Ellen saw that, she was revolted, even though it was in my office, right? And I get it, but we have to teach our kids that, like, as much as you may not like Trump or Elon Musk, they just don't care what you do. Like, believe me, they're not looking to get into your life. They kind of just want to do their own thing. And therefore, you should be focusing on doing your own thing a little more. And that doesn't mean you can't help the person next to you or your neighbor. It just means, put yourself in. You got to take care of yourself. Like, no one's out there looking for after you, right? And so it's an important message. And the same thing with your portfolio, right? You can index and whatever, but you really have to ask some smart people. But in the end, you pull the trigger. It's your own money. And you got to get smarter at doing this yourself. You can't just rely on Nancy Pelosi trackers and weekend tweets from Donald Trump. They've been telling you what they're going to do, right? And smart people like us and like Gurley and even Gerstner were saying austerity, and Stevie Cohen were saying the austerity's here, guys. It's not good for the markets. Like they can't sugarcoat it any other way. We can give you some ideas here every week, which we do, but smart people are out there telling you the exact same thing. All right, boys. Phil, good job. Mike, great to see you. I'm glad you and Lewis are connected. Lewis, thanks for doing this. We'll have you back to catch up on this trend. It is one that is at top of mind, I think, Mike. So have a great week, everybody. Sorry we went long. Boys,
Everybody,
thank you.
thanks.
Lewis,
Wonderful.
thanks for
Lewis.
coming.
Thanks, gentlemen.